okay, let's kick it off with Bitcoin. It is the trade du jour and the talk of the town right now as we see the cryptocurrency heading towards triple digits. Do you think this is sustainable or just speculative?
Well, I think as your last speaker in that interview suggested, there's huge potential going forward with Mr. Trump now in or getting the keys to the White House at the end of January. But with the amount of leverage that's in the system as well, beware of any short-term pitfalls and corrections. But for somebody that hasn't been in it since it was 5,000 and now facing 100,000, it's an interesting watch at the very least.
Indeed. And, in terms of the capital accumulation opportunity here, if you have been sitting on the sidelines, you have missed out. So let's watch this space. Let's see where it goes. And another question, of course, being if we do see Bitcoin crossing 100,000 USD, does that change the investor sentiment in this space? I guess we'll have to find out. Simon, can I also ask you about just general trading market activity and sentiment right now? How do you think markets have been moving kind of post-NVIDIA this week? Obviously a big mover in the United States. How are you assessing market sentiment right now?
Well, if you look at how the market closed overnight, the S&P 500 was up 0.5%. So we've come back from sort of the negative or the disappointment that we had in the immediate aftermath of the NVIDIA results, which were, as you said earlier, a beat, but it was the forward-looking forecasts and guidance that disappointed. I think the market getting a little bit greedy, perhaps, in terms of what it's looking for. But in terms of sentiment more generally, in the context of Mr. Trump coming into the White House in January. We're sort of still very much on the soft landing schedule as far as markets are concerned. Just cautiously optimistic going in. I think we've seen the sort of revisions to Fed rate cut expectations. We've been saying for a long time now that the market was far too dovish, so we're very pleased to see effectively the December pause being priced in and maximum 3 cuts in 2025 now more than feasible. So the market very much on soft landing sentiment and risk on sort of, across risk assets. And here in the GCC, performing very well on the back of very solid sovereign fundamentals.
Indeed, and stability in the oil markets as well. Simon, how do you want to be exposed in this environment, particularly as investors seek to assess the overall inflationary impact of the incoming Trump administration and what that's going to mean for Fed policy moving forward?
No, absolutely, and that's one of the big questions. I think that's one of the risks that the market is ignoring at the moment is the fact that if Mr. Trump comes in as aggressively as he suggested during his election campaign, then the inflation impact of his trade policies and of his tax cuts, the black swan out there for 2025 could be the fact that perhaps not the next move, but one of the subsequent moves from the Fed will actually be an interest rate rise again, an interest rate hike in 2025, rather than those 3-4 cuts that the market had been looking for. So in terms of positioning, it's really sort of still being long vol going into the new year. Uncertainty is going to continue to weigh on sentiment and force an up in quality bias, I think, across portfolios.